This is Teddy from thefinancialbulls.com with a bi-weekly recap along with some setups for the next 2 weeks. So starting off with the S&P 500. The S&P 500 once again has, in the past 10 days, 10 trading days, it's been on a tear. 10 days ago it was around right here, and that was when the market had a really steep, really harsh correction, and then it just whipped right back. And so far, this day right here broke above the 10-day moving average and the 21-day moving averages. And ever since then, the market has gone from 1935 to over 2000, back to all-time highs actually. So it's a pretty ridiculous market. It's a trader's heaven. And there have been nice places along the way to get long. As you can see, through this up move, the market has been hugging that 21 period moving average very nicely. So if you bought some dips in this uptrend, this mini uptrend for the past 2 weeks, then you would have fared pretty nicely. So it's back to all-time highs. We draw some technical resistance from the prior high. It blew past that, as you can see right here. So it's above prior resistance and it's trading at all-time highs. So the trend is up. It's above the moving averages. People are buying, and that's what you should be doing too. I mean, I think it'd be very hard to short this, but then again, I also think it'd be very hard to buy this too, because the market has just gone up so quickly, and just so quickly. It's just gone up so much in such a little time that it'll be difficult to buy it, I feel like, at this point. But if you were forced to do something, you'd be a buyer. I mean, this is a great chart. This is the 1 year chart. It's just a very constructive uptrend. And you can see the fake out right here from the previous low. Everyone was saying, I was even saying it too, if we broke below this level, then all hell would break loose. I mean, we went far below that at 1900. We touched 1818, but then boom, right here this day, that we broke above the moving averages, we broke above this prior resistance. That was the signal to get long, that the uptrend was going to continue. So overall, I mean, as you can see right here, just a complete V-shape that is a trader's heaven. I mean, that's just perfect volatility. It's perfect for short-term traders. So to go over some quick plays from the past 2 weeks, we had PTRY. So this stock we notified it around right here in this area. We saw it was consolidating around the 10-period moving average in an uptrend, low volume during the consolidation compared to the up days on high volume. And the next day after the alert, this day happened. So we were kind of looking at technical resistance right here. That's what I was looking at. Sorry, let me move that. Broke above it, and then it's just been riding the 10. Had a nice another consolidation zone right here. Nice bull flag, mini bull flag. And ever since, it's just been hugging that 10-day and continued to be riding up. So if you bought that when I notified it, then you'd be up very nicely. Another stock, DTSI. This was also riding the 10-day. I think it was right here that I notified it at $27, and now it's north of $30, 30 and change. So that's another good play. What else? ARTSQ. This stock was alright. I think we notified it right here, and it had a nice bounce off the 21-period moving average from 1228 to 1275. So if you caught that, you would have been up nicely. What else? Some stocks that didn't go so well. Actually, one stock that didn't go well, PAHC. This was a beautiful play. Right here, as you can see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days ago, last bi-weekly market recap, saw that it went down to the 21-day right here on $23, and then it just exploded off the 21-day, and now it's at $28. So that's like 30% in 10 days. So that was a good play. I'm proud of that. Some plays that didn't really work out. FINL. I saw this kind of bearish flag forming below the 21-period moving average, but it actually broke above the upper trend line of that bear flag, so that negated the setup. Stock that went well, HELE. Saw a little bit of a bull flag, sorry, right around here at $60, and now it's trading at $64. And I mean, a lot of these setups worked out, and I could say I could take credit for them, that these were great plays, but really the main reason why I was right on these long plays was simply because of this right here. The market just went straight up. So, I like to think that I was being really smart, but in reality, the market helped me out a lot. So now for some plays coming up, I'm looking at Facebook, and what I see here is a pretty prevalent bear flag, and I like to train these short-term consolidation patterns up and down. So this is below the 21-day. They went down on earnings from $80 to $76. Not much for a high-moving stock like Facebook, which has literally, as you can see, doubled, almost doubled the past 2 years. More than doubled. I mean, that's just a crazy chart. And it'd be crazy to short this, but right now I feel like, given that it's forming this bearish flag pattern, here's an hourly chart where you can see that bearish flag forming below the 21-day. And as you can see right here, I think this is the telltale sign right here, very, very low volume, decreasing volume in this consolidation zone. So even though this is a little bounce, the bounce has no legitimacy. No institutions are really buying it, and that's shown through the low volume. And then you could see on this down day right here, when it gapped down, there was huge amounts of volume on the down days, over $7 billion worth of shares traded. Another stock, Hyatt Hotels, forming another bear flag, just like Facebook. This went from 62 to 57, that's the flagpole, and then it's being constricted right now between these two trend lines. This is the hourly chart. And also, as you can see right here, you have very low volume on the consolidation zone. So I would short it on a touch of the upper trend line or on a break below, let's say, 57. Some more stocks that I was looking at this week, actually. This was pretty cool. This worked out. It's kind of late to get on board, but I saw this bullish flag a couple days ago. I didn't want to make another video because I like to stick to the routine of the bi-weekly recap. But it was forming this nice, as you can see right here, this is when I saw it, nice bull flag above the 10 period moving average, and then it just went straight up. Went from $35, big up day, big up day, big up day. So $36 to $46. So a $10 move on a $36 stock. That was pretty incredible. Look at this volume down here. Just huge, perfect amounts of volume right here. This move actually had legitimacy. So I don't know, if it were Friday 4 days ago, then you would have heard about this from me, but unfortunately, but it worked out. It worked out. It's just cool to go over these plays, which I was looking at over the week to show you about and show you these types of things that I saw over the course of the week. Another stock that I'm looking at, ELY. This is Callaway Golf, so for all you golfing addicts. The stock has been in a downtrend, without a doubt, but recently they reported very strong earnings. They blew past earnings estimates, and they raised their guidance for the next quarter. So the stock went from $7 straight up to $8. And ever since that, it's been consolidating pretty nicely in this bull flag, and it's been holding the 10-day as well as having low volume during the consolidation period. So everything is lining up for a very strong play if it can break out of, let's say, $8, or if it retests $7.66, I'd be a buyer as well. Just to show you a better picture, this is the hourly chart. So you can see it's a very defined pattern happening right now in the consolidation zone on low volume when there was huge amounts of volume on the up move. So I feel like maybe it could repeat history just like it did down here with this bull flag and continue upward. I think the stock has newfound momentum, and this would be the place. Sorry, this bull flag was right here. So this would be the place I feel like to get long. If you want to take some more risk and buy within the consolidation zone, that's an option. Or you could wait for the breakout. Either way, you can make money, but it's just about how much risk you're willing to take. And given that this is a low price stock, I feel like if it breaks out of this $8 area and it can go higher from here on substantial volume, so it's got to be at least above $7 million worth of shares traded. This is the dollar volume. Then I feel like the stock could go a lot higher, possibly riding the 10-day period moving average just like DTSI is, where it hasn't even touched the 21 in over a month. So those are the strong stocks that you really want to be trading. And those are the stocks, the trending stocks, the powerful stocks that institutions are accumulating. Those are the ones that are going to end up making you money. So I feel like that's it. Yep. So that's it. And just want to thank you for watching again, and I'll see you in 2 weeks. Good luck trading.